Good evening, lunatics. We have Steve Wheeler with us tonight. We're going to talk about all things accounting, tax related, all of your questions that you could possibly have about taxes, business entities, accounting. Steve is your guy. Now, if you don't like me, this is going to be a great episode for you because I'm going to fall out and I'm going to play producer and I'm just going to let these two go at it.
Nobody likes you, okay?
Well, listen, that's an unfortunate that's an unfortunate truth. What Al Gore call it? Inconvenient truth.
Inconvenient truth.
Yeah. So we are at the Wingate. We have been at the bar for a couple hours, so things could get.
Who knew that, right?
Look at that. See that look right there? He's got it all over his face.
Now me, I'm not the one that misses chords and whatnot. I'm good right here. Okay.
Right. So because my iPad's about to die.
So a little background. We are starting our very first Masterclass 2023 session 1 this weekend. So we've got 4 guys that are here. They'll be starting in our new class, our revamped class. So that's why we're in West Virginia. Because we haven't done this program the way it is actually written right now, we were concerned about doing the podcast on Saturday night because we were afraid that maybe we would not get done in time with the class to do the podcast. So we decided to move the podcast to Friday night. Plus, we have a special guest tonight, and that's Steve Wheeler, who is a BCO. He won one of the trucks last year. So you guys at Landstar probably recognize his name. But Steve, in a former life, has a strong accounting background. And I met Steve a long time ago in conjunction with Kevin Rutherford and the CMC. And, we've kind of had a relationship all along. And, he is a really, really good resource for everything involving taxes, IRS, business structure, things like that. So I thought because of the time of year, this is the time of year where you've got to make decisions about things. A lot of you guys we've talked about for a long time about becoming S-corps and that sort of thing. Well, you got to make that decision before March 15th. So we want to get Steve on to answer these questions tonight and then talk about just in general things trucking tax related. So that's what we're going to do tonight. Like I said, we're in West Virginia. We've got 4 great guys here this weekend that are starting in the program. We won't do a lot about promoting tonight, but our website has been revamped. Our Masterclass 2023 is on there. If you have any interest at all in being in our program and learning how to become an operator, an owner-operator the right way, especially at Landstar, with minimum risk and being able to do business in any economic climate, check us out. We have people right now that are begging us to take their trucks and put drivers in them. So we have plenty of capacity that we could acquire, and so we have lots of opportunity right now. So before, when we had very limited, we typically have 14, 15, 16 trucks typically available to us. Right now, we have unlimited trucks available because so many fleets want us to manage their trucks for them. So we had 3 fleets in 24 hours contact us and beg us basically to take over their fleets and run them for them. So anyway, that's enough of the plug. So I want to remind everybody that Pittsburgh Power is our primary sponsor, and we are. I've been a Pittsburgh Power customer since 2008, long before we were ever obviously having a podcast or being sponsored. I use the Pittsburgh Power products because of the value that they added to my truck and the improvements in performance and in particular fuel mileage that I got from that. About a year ago, they came on board to sponsor us because of the fact that we've used their products all along. So we are stocking distributors for the max mileage catalyst and also the OPS products, the oil purification system. If you don't know what those are, we have podcasts about both of them that you can research and find. So, Chris, I think without any further ado, I think let's introduce Steve and bring him on, and let's get to the heart of the subject tonight.
All right, let's do that.
If you guys have questions or comments, just post them. Chris is going to be our call screener, and he's going to be the one that's going to decide which questions that we answer in the order that we're going to do it in. Steve and I are going to have a conversation back and forth. I'm a numbers guy. He's a numbers guy. He has a lot more tax background than I do. I've run businesses since 1977, but I'm not a tax accountant. Didn't stay at a Holiday Inn last night. Don't claim to be one. Don't want to be one. I'm more than happy to yield those questions to Steve because he is very knowledgeable about that. So, and he and I'm sure, are going to agree on everything accounting wise. But like I say, when it comes to tax stuff and business structure stuff, I'm going to let Steve give his opinion tonight. Steve, welcome to the podcast. You have been here before. Early on, when I started the podcast, episode 49, there was a week when Chris could not be here. I don't remember the number, but you stepped in and you were my guest. I think it was audio only, so it had to be in the early 50 episodes. But you and I had a similar conversation that night. I appreciate you being there, and I certainly appreciate you being here tonight now that we are actually video and audio. So welcome to the podcast, Steve. And I'm going to give you the floor right now. You can give your opening statement, and we'll see what kind of comments we get. And we'll just, I'll just talk, okay? So take it away, my friend.
Well, thank you, Larry, and Chris too. I know Chris is in the background now, but yeah, I do appreciate being with you tonight. Like I said, I think it was like 52 was the number. It was like 3 or 4 weeks, or 3 or 4 after y'all got started. After Chris had his for a while there, but
right.
But yeah, so most people just they hate taxes. They hate the IRS, and we all do. They hate government. The money's spent, the money's wasted. Everything that's done is not done in a way that we all like it. We know that, but it's a necessary evil. It has to be done. We have to know. In running a business, you've had several different businesses in your life. Every business, you had to know how much revenue you had coming in, how much in expenses you had going out. You had to know all of that, and you had to be able to make sure you were making a profit. And then you have to also take all that information and you have to give it to the government every year. And there are a lot of different ways you can do it. They want to know it. They want it to be honest. And a lot of times it's not with a lot of people, and they'll come around and they'll come around and let you know if they catch you on anything. I mean, they're pretty good at
wait.
We're having some technical difficulties. Every time we come to West Virginia and we're not in our home studios, we end up with these little gremlins that show up. So I apologize for this. But while we're waiting, Steve, there's only 2 reasons to have bookkeeping. One is the IRS requires it.
Right.
And number 2, the other is to give you the information so that you can better manage your business and understand whether or not you're making a profit. Just because you got money in your pocket doesn't mean you're making a profit. We all know that. And then 2, it's one thing to have a bookkeeping service, but if you don't look at those reports, if you're not intimately involved with those numbers, there's no management advantage that comes from having somebody just do your books.
No.
The ability to look in there and find trends and look for things that don't look normal to you. That's the real advantage for having bookkeeping. Would you agree with that?
Yeah, it is definitely. I mean, you've got to the person that doesn't look at the reports, if they do have a good bookkeeper, they might as well just put all their receipts in a bag and just take them on April 14th, because they're not gaining anything from that.
Right.
And that's, to me, that's more important than the IRS part. Tonight, I'll be able to tell y'all a lot of different things that you can do to reduce the amount that you pay the IRS. That's the biggie that most people want to know.
And that's our obligation to ourselves. Everybody needs to pay their fair share, but nobody needs to pay 1 penny more than what they're obligated to pay. Would you agree with that?
Exactly. You need to be able to make sure that you can tax plan to where you can get the break now, and you can save for your retirement later, or other things. There are lots of different things you can do, to do that now. So
Right. Well, why don't we start with this? Let's start with the basics. Let's start with the basics and build up, okay? We're starting a new business. What are we going to do? We're going to be a sole proprietor. We're going to be a partnership. We're going to be a corporation. Let's start with the basics of the business structure, and let's go from there. Deal?
right, yes. So if you start a business and you do absolutely nothing, you do you do not apply to any state for any kind of LLC or anything, you're going to be a sole proprietor. And
That's the easiest thing to do. That requires nothing special except
nothing special.
Filing a Schedule C, right?
It's not even required for a sole proprietor to have a business account. It's not smart not to.
Right.
It's smarter to have it.
You can keep the same checking account. You can what do they call it? Commingle funds. You don't have to do anything separately. You just have a Schedule C, which you list your income and your expenses on your 1040 regular individual tax return. Is that correct?
Exactly. That's exactly what it is. And because there are very few barriers to having a business as a sole proprietor, they get audited a lot more. They get audited one out of every 80 Schedule C sole proprietor will get audited on average.
Now, I've always heard this. I don't think it's true, but I've always heard this. That does the IRS distinguish between a hobby and a business? Is there some type of magical number that changes you from a hobby to a legitimate business?
Yeah, what we always hear is if 3 out of 5 years you're not making money and paying some tax, they consider you to be a hobby.
Right.
That's the kind of rule of thumb. I have never seen it anywhere in code.
Haven't seen it written. Yeah.
But that's what you always hear.
Yeah, I've heard that too.
Yeah, if you keep writing off things and you're writing off income from other sources it could be a hobby. A lot of people, you're in horse country. there are a lot of hobbyists in Kentucky, I'm sure.
Horses are expensive, okay?
They are.
But you're right. It's not written. You can't find a law that says that. But there's two kinds of audits, Steve. There's a random audit that's just a percentage of everybody it's kind of like a drug test for a truck driver. It's random. Okay, right. They're going to take a certain number of percentage of returns every year, and they're going to audit them. I think we may have one of our drivers getting one of those as we speak. And then there's ones that are tipped off by red flags. Would that 3 out of 5 years maybe be one of those red flags that tips off a second look?
That would definitely be a red flag. I mean, we all hear that these truckers that say I've been an owner operator for 20 years and I've never paid any taxes.
Yeah.
I'm sure they're going to be scrutinized because you're just not going to. If you're making money, you're going to pay taxes, and if you're living off of something, then you made money, or you wouldn't be living. You wouldn't be paying rent. You wouldn't be eating. You wouldn't be.
Let's talk about that for a minute, okay? Because that's a common thing you see on Facebook or in the CB radio world. I made all this money. I've never paid any taxes, okay? Now, listen, you and I both know that the only way you don't pay taxes is if you don't make any money, right? If you're making money, you owe taxes, all right? Now, you can find some third-rate truck stop accountant that maybe deducts your chihuahua barking in the truck as a security system. But at the end of the day, the only way you can't pay taxes is not make any money, right?
That's exactly right.
If you're making money, you owe taxes. I mean, that's how it works. Right.
There are ways you can minimize them. Obviously, there are plenty of ways. And there are guys that don't have to pay a lot in taxes. There are guys that will buy a new truck every 3 years so that they'll have a high depreciation amount.
Right.
But they're paying they're paying recapture depreciation when they sell that other truck. They're paying some taxes. They're not being totally honest about it.
Now that's a common thing we hear is spending money to keep from paying taxes. I don't want to do that now, but Chris, I need you to write that down. We want to address that later in the event because that's a common misconception that if I spend money right now to keep from paying taxes, that's a good thing. And so, Steve, I want to talk about that, but that gets a little ahead of our game right now. So let's get back to sole
Let's get back to the
proprietor.
entities.
Yeah. The difference.
So
Exactly. Let's do that.
so as a sole proprietor, everything is in one account. You just do it. You got money coming in, you got money going out. You have there is no real structure to the business. To me, I can tell you, when I S corped 6 years ago, my business took off. It was much. It was before that. It was more of a helter skelter type thing. But once you put everything down into a corporation, and you're doing things legally, you're running a full payroll, everything every month, everything that you're required to do as an S corp, then it does help you get structure, and it makes you run your business better. I kind of felt like it was a little bit more of a hobby when it was a sole proprietor.
Right.
But I was making money, but it wasn't, but
right.
It was it was a different situation. It really was.
But most people start out as sole proprietors because it's easy to ease into.
It's easy.
You don't know how much money you're going to make, so you're not spending all the money to do. The thing about becoming a partnership or an LLC is that it requires another tax return, which isn't cheap.
Right.
So that entity is recognized by the IRS as a separate person. A sole proprietor, your business and your individual identity to the IRS are the same. You don't have an FEIN, all that sort of stuff. So it's an easy way to get into business. But we're going to find out later on as we talk that there's some disadvantage to that,
Yes.
Especially when it comes to tax savings. So
Right.
let's we don't get a lot of these in trucking, but let's touch on partnership, because that would be the next step. You're going to go in with somebody else. The two of you are going to get together, and you're going to buy a truck, and you're going to start a partnership. So let's talk about that a little bit.
So the partnership is going to be a lot like an S corporation, in that you are going to have more structure than a sole proprietor. And it depends on what the split is. If it's 50-50, once you get the partnership return done, then all the money is put on a K1, and whatever percentage each person has, it goes to them. The biggest problem with partnerships is more the interpersonal problems there. People that are friends become enemies, or as Dave Ramsey says, the only ship that will not float is a partnership.
The partnership, yeah. Well, partnerships are like marriages, okay? Except it's very hard to get divorced, okay?
Right.
So, and you're right, because you can take two friends. The best way to run a friendship is to get in business with each other, okay? That's the best, especially a family member, okay? Everybody knows a brother-in-law that wants to do this. I can tell you right now, that will make Thanksgiving and Christmas a horrible experience for you if you do that.
Yes, it will.
Yes.
It will.
And so you're right. So you can make a 50-50 partnership. You can make a 60-40, whatever it is. But the K1 is going to represent whatever the profit is or loss based on your percentage of what the partnership was set up. Correct?
It is. That's correct. That is correct. And if you're an S corp, a single person S corp, it's going to all 100% of the K1 will come to you. But that's the only difference there. But
right. Well, let's hold on to S corp for a little bit. So now, if we formed a partner, you and I got together, and we formed a partnership. Okay. And let's say you own the truck and I didn't. So you're 60 and I'm 40. Let's talk about that. What goes on there? I mean, you're 60, you're 40. That means you're the majority partner. I'm the minority partner. That means you make the decisions. I have to go along with it. What could go wrong with that? What could go wrong with that, Steve?
Well, if you're friends, a lot could go wrong with it. And like I say, what if the wrong guy is at 60%? I mean, what if the guy that's the better business person running a business is not the guy making the decisions? That's when it would really get bad. But
let me tell you something else that worries me about that. Okay, is that when you form I don't want to get graphic here, but when you form a partnership, you're in bed with somebody, okay? So everybody they've ever been in bed with, you're now in bed with too, okay?
Yeah.
You follow what I'm saying here? So
Yeah.
when you do that, you take on whatever, how can I say it? Whatever history goes with that person comes to you. Okay.
Yeah. Credit history, lots of bad things that can come that way. Yes.
Tax returns
tax returns. Yes.
So it's not something that the reason that Dave Ramsey says what he says is because most partnerships do not end well. As a matter of fact, the advice is if you're going to form a partnership, at the same time you form the partnership, go ahead and form the dissolution. Okay, have it done in advance. Because it's going to happen, and this way you've already addressed all the issues before it gets emotional. Correct?
Correct. And there's a whole lot better way to do it. You can, through the S corporation, you can do what you and I would consider a partnership, but it's a lot cleaner. Right. Let's say a 60-40. You're still going to have your interpersonal problems there. We know that. But the 60-40 and the
not
S
me and
corp,
you though. Not me and you.
No,
right?
no. But they're gonna the people that are generally getting in these.
Right.
But
because here's how a partnership forms. One guy's got the money. One guy's going to do the work. That's how a partnership forms. 99 times out of 10. Would you agree?
Yeah.
What could go wrong there? What could go wrong there?
Wrong there. That's it. If it were actually where one person had a lot of the money and the other guy had a very, very good plan and a very, very good business plan and acumen, that would work. But then again, the guy saying, I'm working so hard and all he's doing is just putting the money in and I'm doing all the work. And it's still, you're still going to come back to that. And,
there's a reason why he says that. And that's that most partnerships end in failure, okay?
Right.
And not only failure, but you ruin a friendship, ruin a relationship. If it's family, you've ruined like I say, every holiday is no longer a holiday, okay? No. So anyway, let's go on to now. The next thing would then be I guess an LLC or a corporation. Would that be the next step to you?
Well, an LLC is actually a state designation.
There's no such thing as an LLC on the federal level. That does not exist.
No,
it's a
such
corporation.
Thing. The only thing they do is they will put on there Liberty Transport Services LLC, Blue Ribbon Logistical Solutions LLC on your corporate tax return. That's as far as it goes. Right. Now, the LLC, most people think, oh, well, if I get this limited liability corporation, LLC.
Yeah, let's describe that. LLC means limited liability corporation, or in some terms, limited liability partnership. Or what's the professional one? Limited liability.
Like the lawyers and the
CPAs.
And those, like I say, those are state designation. Now, here's the misconception. Most people think, well, I have limited liability now. I can drive this truck up and down the road, and if I have a wreck, then I won't be held liable for it. The corporation will. Well, if you're a single person S corp, and most of them are out there, or a husband and wife team, most of them are. Then you're still driving the truck. They're going to pierce the LLC.
Pierce the corporate
veil.
They're
coming after.
Yeah,
we'll talk
about piercing the corporate veil a little bit. Right. But here's the problem with the liability, and of course, all the Sirius XM late night commercials are about LLCs being a limited liability limiter. Okay, here's the problem with that. Nobody is going to accept a new LLC's signature from a business standpoint only. They're going to make you sign as an individual. Okay, if you're leased to a carrier like Landstar, okay, they're going for the deep pockets. All right,
they're going after the star.
Absolutely. We're going to talk about that a little bit later about the advantages of an LLC. But let me dispel this, and you can correct me if I'm wrong. But there is one reason and one reason only to form an LLC, especially an S corp, and that is for the tax savings. The
That's for the
liability
tax.
part of that is complete bullshit, and it's just
It
somebody
is.
selling you a reason to do it that will never stand up because you don't have the ability to sign as an LLC. You have to
Right.
sign as an individual in the support of your LLC. And once you do that, the liability part of the LLC is gone.
That's
Right?
it. That's
Okay.
it. Yeah, and the LLC, like I say, if you have a company that has more employees and somebody does something wrong, it can help you there. But if
Yeah.
you do it, if you're the one that does it, yeah, it's not. Now,
If
most
you're
people,
driving the truck and you're the LLC person, you're the driver, and you kill
yeah,
somebody, guess what? You have no limited liability. Okay,
right.
you killed somebody. All right.
But
So
here's the biggest plus for having an LLC is that you can go to your Secretary of State's office, their website. You can put in your name that you want. If Blue Ribbon Logistical Solutions had been taken before Larry Long decided to put it in there, you wouldn't have
right,
had that name,
right, right.
because I tried several different names that I wanted to put on my company before I came to Liberty Transport Services LLC.
Right, right.
And that, but once you got it, nobody else in your state
Yeah,
can get it.
yeah, exactly.
That's one thing. So you
now,
can have,
that's
it does
only
help you there.
that's only statewide. It's not
That's
nationwide.
no, not
There's
nationwide. That's
actually
statewide.
there's actually a Blue Ribbon Logistics in Indianapolis, Indiana, by the way.
Yeah, I've seen
So
it.
yeah, so I'm not them, but I
Yeah.
didn't name my company that. We use that a lot because it's an abbreviation. But we're Blue Ribbon
Right, right.
Logistical Solutions LLC.
Right.
So we're registered in the state of Kentucky. You can pay to register that federally, but that's very expensive,
Yeah.
and it's not really necessary.
No,
So
that would be a trademark situation.
right,
Yeah, that's
right.
very expensive. But
It
but
would be one of
it's
those
two hundred
one of
dollars.
those
It's $200
S's.
a year, right? This
Yeah,
200. I
yeah.
don't know about it in Kentucky, but it's $200 a year in North Carolina,
Right.
and
It's a
it's not.
registered. It's a registered. It's called an S. It's S with a circle. Registered service
Yeah.
mark. Right. Yeah,
Right,
yeah,
that's
yeah.
it. So that's the only reason you have the LLC. Though there's nothing special about it. Now, most people when they S corp will do it. Then it gives you kind of an official name, and then you can apply with form. I think it's 2553. I think it is 2553 is the form to apply for an S corporation
Right.
with
You're
the
right. That's
IRS.
correct. Right.
And you must apply by, if you apply by March 15th, and then you apply by then, you can get it for that year. If
Right.
you wait after that, they're not going to approve it.
You have to wait till the
Generally
next
speaking,
calendar year, right? So
next
let's go
calendar
ahead
year.
and get to the top of the thing that we advise most people to do. There, first of all, remember our audience is primarily Landstar. Our audience for primary, if not that, they are the first time truck owners buying their first truck, going to business for the first time. And what we've always said, Steve, and I think you'll probably agree with this, that if you're going to make more than about $67,000 in net profit in a given year, it pays you to become an S Corp LLC. So let's go ahead and address that. That's where we direct people to go. So let's talk about what that S Corp means, and let's discuss the reasons why we support that, Steve, if you won't mind.
Well, let's actually the 67 probably has moved a little bit in the last few
Okay.
years for a couple
Okay.
of things. We have the QBI, which is the Trump tax cut, 20% of any small business corporation, small business, either a sole proprietor or a partnership or an S corporation,
The
gets
pass
20
through.
pass through. Right.
Okay.
That kind of, it might move it up a little bit since that's involved now, because you're
Right.
getting that 20%.
Right. Right.
You're also taking, you've got to be making a fair amount of money, because you're also going to take off your depreciation. You're going to take off your,
Per diem.
per diem. Yeah. So there are a few things, if somebody has 2 or 3 kids and they have them in their business, it may behoove them to stay as a sole proprietor, because they're able to pay them up to $12,000 a year
Right.
with no payroll taxes involved. And also they can pay them $12,000 a year, no payroll involved, and the kids don't have to pay any taxes because of their standard deduction. Now, I think for this year it's actually 14.
I don't talk about that very much, okay? So why don't you talk about that, because that could be a big game changer for some people.
It really could. Well, you take somebody. Let's say you take somebody that's got 3 kids between 4. Or you cannot do it below age 7. So say somebody's got 3 kids between say 14 down to 7, they could write off. They got to have something for the kids to do now. It's got to be legitimate. Have them something to do. Have them fill out their time when they do it. And
Right.
and with kids nowadays, a whole lot of it might be the social media thing. It might be the website thing, because they're pretty sharp with the computers now.
Yeah.
A kid is
They're
7 years
they're
old.
born with more talent with the technology than I've acquired in 69 years. Okay.
I
Yeah,
can
yeah,
testify to that.
yeah. Oh yeah, I'm sure Chris fit in with 3 of his kids like that. So,
Right. Right. Right.
but yeah, so that's one. I mean, things they can do. They can do some filing for you. The younger kids can clean your trucks up, things like that. And
Right.
then, but there are a lot of other things you can do there. Well, first off, that kind of moves that number a lot higher, that you might want to stay a sole proprietor if you've got kids in that range, if you
Right.
have that situation. Everything
Right.
in taxes is situational,
Sure.
because and if your situation is that, you could probably make 110, 15, 20,000 a year between the QBI, between having 3 kids. You do that. And the other big,
Describe what QBI means, just for the audience.
yeah,
Okay.
it's qualified business. I call it pass through. I don't know why I
Yeah.
haven't.
I refer to
Yeah,
the
but it's
Trump
the Trump tax
the
cut, the
Trump
20%.
tax plan here's what it did. It allowed you to take 20% of your revenue from a LLC, I guess it was, or any
The
business.
net profit of
The
the
net
net profit.
profit, and it's tax free. The first
Tax
20%
free.
of net profit on
Yep.
your business is tax
Yep.
free. So
Because
that's
they gave the big corporations the corporate tax cuts at that time.
right, right.
That was kind of to make it up to the smaller businesses, because it would have made, kind of like the mega carrier. It would have made the mega carriers a lot easier than us single truck operators, had they
Now,
not done things like
I
that in
tell
business.
people all the time when they're looking for a tax accountant, okay, because I advise people to find a tax accountant in their town that they can go sit in now kneecap to kneecap and look them in the eye and develop a relationship with this person. But there's a couple of things that I tell them that they need to be aware of, because if you go to H&R Block or somebody that just doesn't know truck taxes, then you're not going to get an advantage. And one of the things I tell them is, if they don't understand per diem, if they don't understand what the DOT per diem is, they need to go somewhere else. And I would say the other thing is, they don't understand QBI. They don't understand that 20% of your net profits pass through with no tax affected. Then you got the wrong guy. You need to be finding somewhere else. Is that something you would agree with? Or
Yeah, and one other question to ask them is, how do you depreciate a
how
highway
do you
tractor?
appreciate? Exactly.
Because they're going to look into, if they just ask how do you depreciate a truck, they're going to look in there. And the IRS has, under truck, it has a 5-year, which is over 6 tax
6
returns.
years,
IRS,
right?
yeah, they have to confuse everything, but
Right.
but
And let's
but
explain
a
that,
truck, but
because
a truck is a truck in the IRS. It is it's a straight truck. It's not what we drive. We drive a highway
right,
tractor, which is
right,
the front part of a tractor trailer. And
right.
so if they don't know that, that means they just went and put into the search engine truck and came up with 5 years. And that's, so they don't know trucking if they don't
And
know
the
those
reason
two
it
things.
takes 6 years is because unless you buy that truck on January 1, you're going
Right.
to get a partial year in year 1. You're going to get a full year in 2 and 3 and 4, and a partial year, 2, 3, and 4 and 5, and a
Right.
partial year in year 6. So that's
Yeah.
why it takes 6 years to do a 5-year depreciation.
Right, right. And for a highway tractor, we get 16.67% first year, 33% the second and third year,
Right.
16.67 in the fourth year. And all of that, of course, can go out the window if you Section 179. You can write off a lot more of it.
Right.
The time
We'll
at
get
the
to
time I
section
won the
17. Yeah, we'll get to
go ahead.
section 179 toward the end.
Yeah.
We're getting it in advance. Let's go back to LLC. Let's get back to S corp LLC, and we left
Yep.
off with you saying there's an advantage to you not being an S corp if you're going to employ your family.
Right. If you're going to employ your family, you would need to be a quite a bit higher. That number could probably be up near 100. If
Okay. Okay.
closer to 100. Now,
I got you.
but for most people,
So
most
we're
people
talking
don't
about the
have.
number. I'm saying that if you're making more than 67,000 net profit, you need to be an S corp. You're saying
Right.
if you've got young kids that you can employ in your business,
You could go higher
explain.
with that number.
I know you're going to explain this, but you can pay them without any tax benefit or tax
Right.
liability to
Yeah.
them or to you. I know you're going to explain that, but that makes that number go up to about 100 before it's worthwhile for you to become an S corp. So explain
Right.
that, Steve. Okay.
And for that, there's a lot of good reasons to take that particular. It's like I call it a deduction. It is a deduction. You're actually moving money to a family member. Really, is what you're doing. But you can take that money and you can take 6,500 a year and put in a Roth IRA for each child, and they can have a lot of money build up over time. Starting at a very young age, and the time value of money is where wealth is created. Not, you're not going to start saving for retirement at 61 and have a whole lot when you get to 67. So it's big. It's helpful for that. Another thing is helpful for a Roth IRA. Any of the money that you put in it, you can take it out at any time. You can't take the earnings out, but you can take it out tax free. So the kid gets to be 18 years old, and let's say they've got 60, 70,000 that you put into it over those 10 and 12 years. Then they may have another 80,000 in earnings. You can't touch the earnings.
Right.
But you can take that money out, send them
Only
through
the part
college,
that's
and not
right.
not have any student loans, and and that's only Roth. Now,
Now let's explain a Roth IRA. Roth IRA is one that you pay the tax before you invest. It's after tax income that's invested, which means that when you take it out, the tax has already been paid, so it's tax free when you take it out. Correct.
Right. You don't get you do not get a deduction on that. Right.
There's no deduction. You're paying the tax as you go. So.
Mm-hmm.
Right.
Yeah.
As opposed to a traditional IRA, which would mean that you pay that with pre-tax income and you pay the tax when you pull it out. So that's the difference between the two. So okay.
Yeah. So and that, like I said, that makes that moving from a sole proprietor to an S corp situational.
So there's another
more
consideration there, right? There's another consideration there that you need to take into advantage if you've got young kids that you want to take advantage of giving them money that's tax free to them and a deduction to you.
Right.
Right.
So between that and the QBI, there's probably a few less people going S corp now than would have a few years ago. Yeah, that's go ahead.
Let's assume that we don't have that. I'm 69 years old. I don't have kids between 7 and 14 or whatever. So now let's talk about. I started in trucking when I was 54. Okay, so let's talk about somebody in my or anybody that doesn't have the young kid thing. What's the threshold for when it's advantageous for them to become an S corp, and what does that mean? Let's describe that.
I think after the QBI, I think that number you got 67 is a good number. So that would put it, that would put you at about 85,000 of profit, but then you knock off about 17. So that
let me interrupt you just
a
second. Is the QBI that has to be reapproved every year? I mean, that's not guaranteed. I mean, it's been it's been since the Trump tax returns. But is that standard for going forward, or is that got to be reapproved?
It is sunsetted. It will be sunsetted at the end of 2025.
Okay.
So the folks in power in Washington, they haven't tried to have a big tax increase to get rid of it. They know it's going to go away in a few years. They have long memories, and they
so 2024, 2025, 22. So we got 3 more years of where we know that's going to be there. Okay, good. I didn't know that. Appreciate that. All right.
Yeah.
All right. Sorry.
Hopefully, after the next election, maybe we'll have another keep it going. I don't know.
Qualified business income is what QBI
income. That's it. Okay. Yeah. So, and it is, and that's basically all the income that you're going to have. The net profit is your qualified business
profit.
Income.
First 20,000 of net profit. Now, 20%. Is it any business or is it from a corporation?
It's from any. It's from any business. Any business that is a sole proprietor or an S corporation.
Okay.
Some C corporations that are small may have it, but when you get to a certain size, C corporations do not have it. But,
all right. Let's stay on S corporation. I want to touch on C corporation because I don't think anybody listening here needs to be a C corp, but that's my opinion. Let's go back to S corp and I'll let you continue on with that. Okay. By the way, Steve, you're doing a wonderful job. By the way, okay. So.
Oh, thanks.
Steve won the truck. By the way, okay. So
that was in 2020. I have 300,000 miles on it already.
2020 Cascadia DD15. You've never had a parked regen, is that correct?
Never had a parked regen. I've had a lifetime average of 8.73 miles per gallon.
8.7 miles per gallon. But you run. I'm talking about my sponsor. Chris put the banner up. What do you run in that truck to get to do that? Okay.
Yeah, let's have a little commercial here. I'm all for it. He left it off. It's under here. There it is. The max mileage fuel-borne catalyst.
You didn't have to do the diesel force cleaning because from day one you ran the catalyst in that truck from day one, correct?
And I do not idle. I've 9 hours of idle in 2 years and 4 months.
8.73 miles per gallon on a DD15 2020. Never had a parked regen, and every fuel up has had the max mileage catalyst put in.
Every
right?
fuel, 1 ounce per 25 gallons.
Chris, you need to record this clip right here and send it to OPS, okay? So all right.
Yep. Yeah.
All right, Steve, go ahead. Well done, son. Well done. Okay.
Yeah. So, but thank you, Bruce. No, thank you, Dr. Jane. She's Dr. Jane Gates.
Absolutely.
Dr. Jane Gates.
I talked to her a couple of times. I talked to her at the truck show for the first time a few years ago, and then I've talked to her a couple of times. I'll tell you what. She is she makes my eyes glaze over. Have you ever gotten into a deep conversation with her? She absolutely makes my eyes glaze over. I can't keep up with her,
Well, I was skeptical. I called her and I must have asked her questions for 30 minutes before I ever used it. So
Well, we were the same way.
Yeah. So and it's good to question things. We've always heard that fuel additives won't do you any good. Well, there are some depending on the vehicle. Volvo seems to have a lot with the hot shot secrets that they do.
You went to the CMC, right? A couple of times, or
went twice? Yes,
twice. So the CMC guys always kind of pulled together. We were the test drive dumb. What would we call it? Whatever you call us. The test drive dummies.
Crash test dummies
for KR and for the CMC.
Yeah.
There was about 250 or 300 of us that. We got together and we did all the tests. I'm sure you were part of that.
Right.
Somebody would come out with a new. I remember when Schaefer oil came out. I jumped all over Schaefer. I bought barrels of it. And because Matt or somebody experienced. But anyway, we tested all that stuff. And we never ever in 9 years found a fuel additive that did anything close to what it said it did. And so when this came out, even Kevin. If you notice, I mean, of course, as close as he and Bruce are, Kevin wasn't on board with that for a long time. I mean, and we weren't. Listen, I promote Bruce all the time in OP. We are. We're OPS guys. We hesitated. I talked to Jane at the truck show and a couple of times, and then all the evidence just started laying itself out, And what happened for us is we took on a couple of 2016 T680s with PACCARs, and also a DD15, a 2016 DD15. That when it came to us was experiencing all kinds of regen problems and all kinds of check engine lights and stuff. And the guy who owned it said, "Look, it's been a problem." Okay, so the first thing we did was we took it up and did the diesel force cleaning. And I'll tell you where we did it because we're OPS guys, but or Pittsburgh Power guys, but performance. Chris, help me out here. Performance diesel, precision trucking up in Chocked, Ohio. I'm gonna give them a plug. They did the diesel force cleaning on that thing, and I'm going to tell you what. And we even thought that we'd have to put a bunch of sensors and stuff in it. we didn't put anything in it. We did the diesel horse cleaning, changed the oil, brought it back. We ran that truck for almost 2 years, and we had
Yeah.
almost zero emission problems. Every once in a while, but nothing like what the guy was experiencing before. And all it was the diesel force cleaning and running the catalyst. And
That's
after
it.
that, it made us a convenience. So now everything we have that has emissions on it, we run the catalyst. Okay,
Yep.
everything. We
Yep.
run.
Yeah.
And by the way, we are stocking distributors of the max mileage catalyst in West Virginia. So if you guys need some, give Chris an email or a call. Stop at the TA down there in Taze Valley. He'll bring it to you. We'll deliver
that's
it
good.
to you. So,
I'm through there every Thursday.
well, there you go, Steve. So we hook you up, okay?
That's it.
So
That's it.
If you'll bring your old jug, we've got some bulk that we'll give you a good deal on, okay? So if you bring your old jug, we'll refill it and save you a ton of money. So anyway, I'm sorry. We got off onto what do you call it?
Well, we had to have the advertisement. We got to pay for this thing, right?
I kept waiting for somebody to say they had COVID, and Bruce would be like, "Well, have you tried max mileage?"
It cures COVID, right? Maybe that's what cured COVID. I'm not sure, but anyway. So go ahead, Steve. Let's continue on. You're doing a great job, by the way. Okay. So, by the way, Steve, I better not say that. Go ahead. I'm just going to tell where you live and what you do down there.
Look. My goal is what's behind my head right now.
Yeah, I know.
Those are a little pricier. They're about $1.5 million a piece.
Steve lives on the beach down somewhere in the Carolinas. I'm going to say exactly where. He can say if he wants to, but he has and he's on Facebook. He has a beautiful family. His wife is gorgeous. His daughter's gorgeous. He's got it made. Okay, he's living a dream. All right.
Yeah.
How many grandkids you got, Steve?
Got 6. I got 3 boys up in Naperville. Your son's in Naperville.
My son's in Naperville. I have 4 grandkids there. Yeah.
My oldest daughter's there with 3 boys. And
we need to hook up. You and I need to go to Naperville together sometime. Okay.
We need to do that. Yeah, we definitely
absolutely.
do. So,
Absolutely.
So we definitely will. But yeah. So I do call it living the dream. Now, I call myself I do this in jest. I call myself the Colonel Sanders of trucking, because New Century went out of business right before I turned 60.
Right.
And
right.
I went into business then, right just a month, 2 months before I turned 60.
Now, Steve drove for New Century before he came to Landstar, just to give you a little background. So.
I had 33 years with 4 great companies that all went out of business. 2 of them were union companies, and I knew how they were back in the 80s and 90s. But then Javik and New Century, and so it was a good ride. It was a good ride, but I've always been entrepreneurial. Always have.
Right.
Had a really nice nightclub back in my 20s, and so
so
I was very entrepreneurial. So, but yeah, we call it, like I said, I call myself the Colonel Sanders of trucking, because he didn't start
Colonel Sanders
until he was 60.
I've never heard that. Okay.
Yeah, he was 60 years old when he.
So do you have one of those string ties like he has and everything?
I don't have that.
We need to do a picture of you with a white shirt and a string tie like that, okay?
Steve Wheeler, he's finger looking good.
Finger looking good.
I think the Tito's has been rolling. right, Chris?
Okay. Listen, don't ask me no questions. I'm gonna tell you no lies.
All right, back to LLC and S Corp. Okay, let's get back on track here before we get in trouble.
All right. So the normal progression is to start out as a sole proprietor and then go to an S Corp election. And like I say, you do have to do it by March 15th. And here's the thing: they're going to give you the date. I was real stupid back in the day when they gave me my date. It was January 17th. So I did 16 days as a sole proprietor, and the rest of the year.
And then you had to do 2 tax returns.
I did. So, but really, I found out since if they give it to you in March, whatever date they put on it, just go back to the first of the year. They will not give you a problem. Yeah. One good reason, the chances of being audited are much less if you're an S corporation.
Absolutely.
Because they know if you're an S corporation, you are running a real business. You are doing a real payroll.
unless you let somebody pierce the corporate veil. We'll talk about that in a minute.
Yeah.
But here's the thing about a corporation, S or not. If you're going to be one, you got to act like one.
Got to act like
Okay? If you don't act like one, you can't be one. All right?
a real
And that's
payroll.
That's exactly right. So we'll get to that. So let's go back.
Yeah.
Let's go back to S corporate. I'm jumping ahead of him. Sorry. So
Yeah. So I mean, we're not jumping too far ahead. Yeah. So, like I say, that's the normal progression when people start building up. Their money gets a lot better. If you got good customers and you built good relationships, you know how it is. There's no reason why you can't do between 100 and 200,000 a year in net profit if you're doing it really right. And so those people definitely need to be an S corporation. So once you get to be an S corporation like that, you have things you must do. You must do a real payroll. And I went with a payroll company right from
a real payroll. No, so you said
a real payroll, not this just pull money out when you need it out of whatever. That's not payroll.
And the IRS description of real payroll is it must be reasonable. So let's let you address that word reasonable, Steve. Okay.
So people have always they've said reasonable is kind of going up here lately, but
you think?
Yeah, it has. But most people always said reasonable was paying a company driver 40 cents a mile, and 100,000 miles was 40,000 a year. I've always paid myself more than that because we need to be able to qualify for loans for rental property. So that's for me. I've paid myself more, but right now, I've been paying myself. I started out about 54,000, pay myself 72,000 now, and still, I did 190. So I had a lot that was non-taxed for Social Security and Medicare above that.
So let's say that again. You paid yourself 72, but you actually made 190. So that means you had 108 or 118 in dividends. So we'll discuss that and what the impact of that was. So now let's go back to the reasonable, okay? Because the IRS's description of reasonable is going to be if you didn't do the work, what would you have to pay somebody else to do it? And there's a lot of problem with this, okay?
Yeah.
Now here's the strategy. The reason to do an S corp, the whole reason to do an S corp, is to save on your taxes, okay? Mm-hmm. So the less that you pay yourself in payroll, the more that you save because you're saving it on the self-employment tax on the dividends, right?
Right.
And the IRS knows that. They're not stupid, okay? And by the way, the 87,000 new agents got axed, by the way. So anyway. Yeah. The ones we have, they know that. So
they know that.
So there, and any CPA, anybody who's doing your tax returns, if you're not paying yourself a reasonable salary, they're going to put a letter on the front of your tax return that says, "I've advised my client that they need to pay themselves a reasonable salary," and they're going to sign your tax return with that exclusion. Would you agree with that?
Yeah, they will, but I have strategies that will take care of the reasonable amount and also save you even more tax money. Here's what now. Myself, I pay myself the salary, and I through payroll do per diem reimbursement through the payroll every month. All right, but I do it on top of my salary because I need that W-2 income. You know how it is when you're
to support your. Yeah. By the way, so it's just so you know, Steve invests in real estate. That's going to be his go-to when he gets out of trucking is real estate investment. He lives on the coast. He wants to have these Airbnbs down there that you can come down and rent from him. And he's going to get rich on that. So that's why he needs the W-2 income to support his lending needs for this rental income. Is that correct, Steve?
Right, correct. Okay. And that's why I pay myself more than I have to.
Right.
Now, I also pay myself per diem reimbursement through the payroll. If one thing people don't realize, the Trump tax cuts were fantastic in 2017. What they did not do was they made it impossible for the employee to take per diem off because employee business expenses went away, there's very few categories left on the Schedule A. Hardly anybody files a Schedule A anymore
but they doubled the standard deduction.
They
in lieu
doubled
of
it,
that.
and it's and inflation is bringing it up. In 2023, it'll be $28,500 for you and I, because we're married.
So the itemized deduction has gone away, including the per diem for a company driver.
Right. And so most of these companies out here now are doing per diem reimbursement. What they're doing is they're paying their employee the gross amount. They're reducing the number of days times $69 that they were out on the road. They're reducing that gross pay by that amount. And then they're doing the tax calculations. They're doing so those guys are saving 7.65% on each, for each dollar that is put into per diem. All right. And then they're also not having to pay federal or state tax on that. So for most people, that's around a 20-25% cut for them. If they got $20,000 in per diem for the year, that's $5,000 in tax savings for the employee. So in my case, I could take the $72,000 and I could reduce it by that per diem through my payroll, but I don't, because I want the full amount show. But for somebody that wanted to do it to pay yourself reasonably, you could make that part of the per diem come off of your gross pay and then do the tax calculation. So I'd say I do mine for a different reason. But I would say anybody else right now, reasonable salary is about $54,000. And if somebody took the $54,000 and if they really wanted to save a lot of money on taxes, they could reduce it by the per diem and reimburse the per diem in the payroll, and they would save even more. So they'd be in that 36,000 range then, as far as Social Security and Medicare at that point.
So let me go over that again, because you're absolutely right. But let me say it as from a layman's terms. So. So you're saying I've always advised people to do 60, but 54 I'll go with
54 is kind of the 54 is kind of reasonable. The 48 that people talk about is too low. We know that.
So if you pay yourself $54,000 a year as a reasonable salary, what's that a week? It's $2,000 and
I'd say $4,500 a month. So it'll be about $1,000, about a little over $1,000 a week. About $1,000, about $1,200.
So you say you pay yourself about $1,200 a week as a salary, okay?
Yeah. So
and then you take the per diem deduction. Now as an owner operator, you're entitled to this, okay? Now I would say this, as most business owners are going to take that at the end of the year with one single swoop. But if you got employees working for you, and we do this. This is as a small business, we have very few benefits that we can do. One of the ones that we do is we do the per diem, because, like you say, it adds up to about 25% of their income, as tax free. So we do $69 a day for every day that they're away from their home, supported by their ELD logs. Okay. So it averages about $414 a week for our guys. You're out usually about 6 days on average. Okay.
Yeah.
So $414 a week. They're not paying tax on that. They're getting the money, but they're getting it tax free. Okay.
So saving them about $5,000 in taxes.
Correct.
Altogether.
So $5,000. I mean, first of all, it's their money. They can do what they want to with it. But we advise a lot of our guys, well, use that to go buy your health insurance. We're in the business of training people to be in business for themselves. So we don't offer a lot of benefits like that, because when you go into business for yourself, you're the person that is responsible for providing your benefits, right? Exactly. You're breaking that bond of being an employee to become an employer. As the employer, you're the one that gives the benefits. So here's a way for you to get $5,000 of tax-free money. And now you can go out and buy yourself health insurance and provide it for yourself, as opposed to having somebody else give it to you. That's kind of what we think about that. You can do whatever you want to with it, but that's what we do. Now, we kind of lost my train of thought here. So going back to the reasonable salary of what we say, $1,200
54 to 60. That's fine. Yeah.
54 to 60. So now the average person at Landstar that runs the way we teach them to run does 150 to 200 grand net profit after expenses. So they've now got another $100,000 to $150,000 worth of profit. Okay,
Right.
That's going to become dividend. It's untaxed at the time that they took it, right? So now they have to. So now instead of paying the 15.3% self-employment tax, all they have to pay is a 7.62 or 7.65.
They don't even have to pay that. They'll only have federal and state tax. It depends on what their tax bracket is.
Right.
If they're in the 12% bracket, and they could be down in the 12% bracket with some of the tax savings I'm going to show you a little later.
Okay.
So they could be in the 12% if they're a married couple.
Well, I
Could be
need
in
you
the
to help me
12%
because I'm
bracket.
in the 37% tax bracket. Can you help me? Okay.
I know. I know you are. You got 17 trucks. You got to be in the 37.
Jesus Christ! I'm in the 37. I pay 37% federal, another 4.5 state, and another 2.5 local.
And you're paying triple for your Medicare Part B too because of your.
Absolutely. It just went up. I made so much money last year. I have to pay for Medicare now. I pay $583 a week for Medicare. Okay, I'm 69 friggin' years old. Okay, so
well, it's because you're like I say, when you make too much money, that's what they say. You're making too.
I'm going home and quitting. Okay, why am I doing this? All right, why am I doing this?
I don't know why y'all rich people are complaining about paying your fair share.
My fair share. What is your fair share? I'm paying 50%. Okay,
anyway, that's it. But you're right though. But once you get up to those certain levels there, like I say, you lose a lot of deductibility on other things and all like that.
Shit.
But,
Yeah.
But hey, it's a good. Hey, it's a quality problem to have. When do you remember when you had one truck and you found somebody that had a Facebook post that said, "Wow, we might be able to help each other." The guy sitting over there beside you, and you know what? Guess what? It's a quality problem to have when you get to 17 trucks and add.
I guess. I just wish I could. I wish I could dictate what the money. When I look at all the money that I give the government, I wish I could dictate where it went. Okay.
Oh yes. Yeah.
Could you not send it to Ukraine? Okay. Could you send it? Yeah. I digress. We're going to get in trouble here, so I'm going to shut up. Yeah. So.
Yeah. So let's get back to the S corp though.
That's a good idea.
Yeah, on that tax situation. Let's see. We got where was I thinking on the okay. Oh, the per diem. Okay.
You were talking about maybe being able to save enough money that you didn't have to pay the 7.63 or 7.62 on the dividends. So I'm all ears.
You do not have to pay any Social Security or Medicare tax on the draw, dividend, whatever we call it. Okay, you're only paying your tax rate on that. Now, once we get into all the tax savings that we can do, you can reduce that number down a lot. Already. I mean, we know certain things we're going to be able to do. We can reduce it with the Trump tax cut. That's a biggie when you're doing 190,000, all that profit there. That's a big deduction there.
The 20% pass through. That's huge.
20%. Yeah, that's huge when you're getting to that.
Absolutely.
Right. That's
and I'll tell you something else. Now let me tell you, the per diem is normally only deductible at 80%. But the past 2 years, it's been deductible at 100%.
100, right? 100%.
Now, is that going to be renewed? Is there a sunset on that, or is that going to be renewed every year by the IRS?
We're back to 80, and
so that's for sure. 80. We're back to 80 this year.
Yeah, we're back to 80. Shit, now I give myself through payroll the 100%, but on my
I do too.
On my accounting, I only take 80. So you're giving your folks a 20%.
No,
you're giving them. You're giving them 20%. That is what they can go out and get their health insurance for.
I'm giving them 100%. I can only deduct 80%.
Right, and remind me later. I've got a great tip on the health insurance for later.
Okay, write that down, Chris. He's got a health insurance tip later.
Yeah, later.
He's being producer tonight. Okay.
Yeah.
So
and it may for sure might help him in his situation right now, because he's got 3 kids. He's got he can get it pretty cheaply. But I
Y'all are
digress.
pretty
But
confident that I'm gonna be able to read my own writing.
So, so do I need to go? Do I need to go have some more kids or something? I mean, is there something I need to do here?
it always helps. I mean, look at all the
Yeah.
look at all the
Damn.
tax credits that Chris got for 3 years, a couple of years there during COVID. I mean, COVID.
Clarence is so we got a regular here. It's going. Come on, guys, stay on track.
I haven't seen a comment yet. Anyhow,
You
I
haven't?
didn't
Well,
know. Do we have any?
click-
How many we got on?
Oh, we got a
tonight?
bunch. Click. You're probably not clicking the right thing. Over to the right, top right, you can click comments and they'll all show up.
Oh, okay. No,
we got a bunch. We got a bunch.
I've
We'll
got
get
full.
to them.
I
So,
got.
well, let
I've
me-
got full screen.
Let me play producer here for a minute. So,
Yeah, if you want to ask one, we can get right.
so
back
we
to this.
we've talked about business structure. All right. So we've got LLC, which we do kind of need to break this down to the basics, because if you are an owner operator, most people that we're talking to, our target right here is the single truck owner operator. So we've talked about business structure, which is sole proprietor versus S corporation.
No, versus LLC versus S corp.
Okay, sole proprietor versus LLC
Versus
with an
S
S corp election.
Correct.
And how that can benefit them, because we can. I mean, you guys are so incredibly knowledgeable on this stuff.
Well, thank you. Well, thank you, buddy.
Well, easy. Hang on.
Well, thank you.
But here's the thing. I have heard this so much. I mean, yeah, I want y'all to think back when I first joined Larry in 2018. He was still driving and I was driving. And we would talk on the phone for hours and hours and hours. And I would ask him these questions. And so I've kind of gotten this through osmosis over the years, right? I have gotten this kind of fed to me piece by piece, and then I have seen it work out. But I think we do need to step back a minute to the basics, not get too far off in the weeds, because the single truck owner operator right now, based on our TikTok comment section, if you watch the comments that people make, there's so much that people say because, well, my buddy told me, or my uncle told me, or somebody told me this, or somebody told me that, and really they have no clue. They don't have they don't have 1% of the knowledge that's based on experience that the both of you have, right? You guys have lived and breathed this for so many years that I think we do need to take a couple of steps back and make sure that we're hitting the basics, and then we can expand in the comments. So we've got the basic business structure. You're either going to be a sole proprietor or you're going to have an LLC with an S corp election. Then the next thing I think would just be the practical application of that. Because you're going to have a payroll. How do you do that? How do you find a payroll company? How do you how do you set up that LLC? Because think about, Larry mentioned those sharks on satellite radio that tell you all these lies about, oh, well, if you got a back tax debt, we'll fix it, which is bullshit. It's absolutely not going to happen. They're just going to take your money and not do anything for you.
There's nothing they do that you can't do for yourself.
Exactly.
Right.
So let's do that next, because I think it has been overcomplicated how to set up an LLC. I mean, hell, I did it on the West Virginia website in like 20 minutes.
Yeah.
Yep.
So we need to be able to set up that structure. I love what Steve said about, because I've got 3 kids. I'm that guy. Mm-hmm. My kids are between 7 and 6 or 8 and 16.
Yeah.
So I literally could do that. I mean, I'm the absolute example that could do that. Now, I'm an S corp, so, but if you're going to set up that LLC, make sure you understand, one, that most states now you don't have to pay somebody. It's not super complicated. You go to your state's website, you answer some questions, you fill out some forms, you push some buttons, and boom, you're an LLC. Then you get your EIN. So why don't you hit the very, very basics of setting up an LLC and some of that terminology, so that the people that don't have that right now know what to do next.
Yeah, we will do that. I just want to correct one thing there on the on the kids working for you. That works best if you're a sole proprietor. Now, if you're an S corporation, you do have to do the Social Security and Medicare on them. That it has to go through a payroll.
go
I
through
have
payroll.
I have to put them into my payroll.
They gotta be
You
on
have
there.
to put them into your payroll. They don't have to pay any tax up to 12,000,
Right. It's
almost
tax-free.
14,000.
It's tax-free for
Tax-free
them
for
up to
them.
12,000.
But
Right.
but
So
but the
deduction
but
for you, but it's
yeah,
tax-free to
yeah.
them. Yes.
But now they would be getting some of that one of those 35 years you got to have for your Social Security one day to have a decent Social Security. So
Right.
they'd be getting that. But that is the one caveat that if you're a sole proprietor, that would be if you, Chris, had one truck and your truck did 120,000, you would be staying as a sole proprietor because of what you could pay the kids, what they could do with that money to help their future, and not have to pay all that money to the government, and still would be able to stay a sole proprietor. That would be
Gotcha.
that person, But for most people, like I say, when I was thinking about you, when I thought about the kids, because your kids are right in that range,
Right.
So.
So I guess I've always been one that advocated being an S corp if you're at 67. So I need to probably step back from that, and there, because like I said, there's an exception to that, and as if you have young kids that you can pay in payroll, that needs to bump up to, you're saying,
Right.
120 before
I'd
they
say,
would.
well, if you had three kids, yeah, maybe 100 for two, maybe 90 for one. You're going to
Okay.
have your Q and your QBI. Really, if we're at 85,000, then you get your QBI. That's about the number right there to go S
Okay.
corp, because
And the
you're going to knock
QBI
off.
sunsets in 2025. So that
Yeah,
means that, okay. So I need to adjust my my philosophy there, because I kind of preach that,
yeah,
to people. So okay, I appreciate that. Chris, go ahead
yeah,
with your next point.
yeah. Go ahead, Chris, and we'll
Well,
go to.
I think let's break. An LLC is really not that difficult to obtain. You know,
No,
now
Secretary of
in
State's.
2023, I would assume that most states' Secretary of State is going to have a fairly basic process. Now, of course, the government can overcomplicate anything.
Yeah.
But I found that here in West Virginia, it was not that difficult. They love
Yeah.
it. They love for you to set that up. So a lot of them have, over the last few years, have come into this what they call customer focused, which is hilarious. We're focused on you as a customer. Yeah. Okay.
Yes.
But they've simplified the process, and of course, if you go to a CPA in your state, they know, okay, well, I'm in New York, and I've got to do A, B, C, and D in order to set up that LLC. But it's not super complicated. Even the KGB, the IRS, has kind of made the process of getting an EIN simpler, the employer
Yeah.
identification number. But we do need to break this down a little more simply, because remember, our target audience here on Blue Ribbon is the first time owner operator. And the LLC thing scared the crap out of me, because my wife and I went and sat down when I still had my truck. We went and sat down in the office of the CPA, and one of the red flags that went off was, he said, "Okay, well, you need to do this, this, and this, and you'll pay this." And I looked at it and I went, "Well, I can't afford that." Well, that was the first red flag, that my business structure was wrong, and we were spending too much money, because I literally could not live on the reasonable salary plus the dividends, because we were spending so much money. It was the first red flag that went off for me, that, wait a minute, I've done this all wrong. And so if we can explain to everyone what those simple terms are, that if you want to be an owner-operator and you want to have that business that lasts beyond 2 years, what do we need to do day one? Should we have LLC on day one? Should we be sole proprietor for maybe a year, look and see how we do, and then maybe in year two we go to S corp LLC with the S corp election? That should be our first kind of base level, and then we can expand on that further, because we've got some good questions. Got a couple of good questions in here, but we need to caution everybody that a bunch of the BS nonsense that you've heard on late night talk radio or the CB, about how you're going to shield yourself from taxes is just horse shit. It's a sales pitch to get you to buy because you're not going to run from the IRS. They are the most capable collection agency the world has ever known. And if you try to pull one over on the IRS, bless your heart, because it ain't gonna happen, But you got to remember that one of the things that we preach at our people over and over and over again is you got to know your numbers. You can't know your numbers unless you're doing basic accounting. If you're not doing basic accounting, the IRS is going to eat you alive, because when they show up, eventually, at some point, they're going to show up and say, okay, well, show me the numbers. And if you've got a shoebox full of receipts, somebody asked, what was the, let me hit this one. What would be the best way to turn in all of my paperwork to a tax accountant? Not in a shoebox. Okay?
or a Walmart bag.
I can tell you how that works, okay? I can tell you how that works.
So it's daily habits. We talk, we make this reference to Mr. Miyagi, wax on, wax off. It's the daily habits of being able to account. When you have a fuel receipt, account for it. When you go buy a pair of gloves, account for it. When you buy fuel, account for it. And then weekly or monthly, you need to reconcile that data. And at least then you have something for the CPA to work with. And that CPA, if you don't give them a stroke when you walk in the door, or they don't lock the door when they see you pull in the parking lot, then they can get you the best, most advantageous tax situation that you can have. But we can get lost in all the weeds of all the very, very important experience-based advice that you guys have. But let's be honest. Most people don't even have a damn spreadsheet. They have no idea what they're spending. They have no idea what their fuel cost is. They just don't know, because they're like, well, hell, I got to pick up loads and I got to deliver them. And that's it, So the structure is important.
Yeah, that question right there is very important, and most people don't do it right. Evan Eisman. What I would tell him is, I don't care if you do it on a napkin, if you do it in a little ledger book, if you're decent with spreadsheets, if you want to go pay for QuickBooks or profit gauges. Profit gauges is the easiest. I know when you get a certain size, I know y'all have to do QuickBooks with the number of trucks you got, but one truck operator, $19 a month, and it's all online. You put stuff in there, it gives you the reports out. At the end of the year, you have a one-page report that looks exactly like the Schedule C, that when you hand that to your tax accountant, he's going to kiss you, because that's how good that report is. Now, you can make reports well with QuickBooks and other things too, and spreadsheets, but just like you said, account for it when you do it. And it's so easy. I mean, everybody should have a fuel gauges account. You can account for the fuel right there easily, right when you do it, right when you pump the fuel. You can put it all in there. And my fuel gauges syncs right over to my profit gauges. So I don't have to account for fuel again. I add everything up with the discounts in. I add everything up to make sure it matches my fuel gauges, but it does all the time, because I'm a stickler for numbers. So do it every day, Evan. If you do it every day yourself, and then hand that, if you do it through profit gauges, you can hand him that one-page tax report, and he can do your taxes in a matter of a couple of hours. It's going to cost you a lot less to get your taxes done on a Schedule C if you hand him that in that manner. So just do it every day. However, figure out a system and do it every day, and keep up with it. This is very important. Everybody should be downloading their e-logs every month or every 6 months, because most OmniTrax, all of them at Landstar, they require them not to allow you to be able to get your logs after 6 months. the IRS is going to they're going to disallow your per diem deduction if you do not have your logs. Just a PDF. You don't have to print them. A PDF of all your logs, and have that. Just have that PDF in your electronic files, so that if you ever get audited, you've got that taken care of. So, but go ahead, Chris, with the next one there.
So here's a question. Hey, Steve, you mentioned profit gauges for solo owner operators. Are there other apps you recommend? I have heard. What's that one called that everybody we get asked about it all the time?
Fog line.
Fog line. Do you have any experience with that fog line and know anything about it?
No, it's from what I hear, isn't that one of the BCOs that developed it?
Yeah, I
here?
think like a BCO.
It's developed by BCO.
Yeah.
It's a complete management system. Listen, any accounting software works. It's what level you are. The thing about profit gauges is it's designed for truck drivers. Okay, now I'm not promoting this because it's KR. It's $19 a month. There's a lot of support that comes with that. You don't have to be an accountant to use profit gauges. I don't use it because it's not powerful enough to do what I do.
Yeah, you can't add the different trucks together like you need.
Well, and it also does not do any balance sheet. It doesn't do any liability assets.
Right.
Okay.
Yeah.
So I do desktop QuickBooks, but I am a advanced bookkeeper. I'm not his level. I'm not a CPA or I'm not an accountant. I'm certainly not a tax accountant, but I'm a extremely good bookkeeper. Okay. But I want to work in a general ledger, and so I don't want to deal with, I describe desktop QuickBooks, and I'm going to date myself. But if you guys remember, you don't remember, but there was a time when you went from MS-DOS to Windows. Chris, do you remember that? So MS
he was a kid.
so Steve, you're going to remember. MS-DOS is when you typed commands onto a screen with a C prompt.
A black screen. colon //. Yeah.
And then Windows came out and everything was in pictures. That's the difference between desktop QuickBooks and QuickBooks Online. I hate QuickBooks Online, okay? Because I can't get to the ledger. I've got to work with all the window frames and all the bullshit, okay? It probably works for somebody that I don't know. Anyway, so I work in general ledgers, okay? I don't deal with the stuff working in the background. But profit gauges works. It works for individual.
It works for
operators.
an individual one truck for sure.
Absolutely. It will not. Your accountant is not going to be able to take the liabilities and assets off of it. It's not going to balance to your checkbook.
No,
it's not going to.
No, you have to do it. You have to do your balance sheet separately.
It's not even going to balance your fuel cards, okay? But it's going to give you a P&L. It's going to give you income versus expenses. All right, that's the basics, and that's what most people need. All right, that's what most people need.
It will be the exact figures the IRS has to have.
Exactly.
Now, if you're an S corporation, the 1120S, we have to do a balance sheet. I do those separately, balance sheets. Every month I do that.
Right.
But we have to do that separately.
Well,
that's just one of them.
I can speak from experience with profit gauges because, and it taught me that hugely important lesson that if you have not created the habits, which is what we teach here, wax on, wax off, every day, getting in the habit, the muscle memory. When you're trying to go back and enter 3 months of data, it's so much harder. And at that point, it doesn't matter. You could be using a piece of paper, a ledger. You could be using QuickBooks. You could be using profit gauges. If you are not daily, you get a receipt in your hand and you file it. You account for it. You scan it. You do whatever you're going to do with it. And then weekly, with profit gauges is great because you can set it up per your carrier, how your carrier lays out a settlement. And then you put every line in there and then it balances. And if it's out of balance, you see a red number and it says, okay, well, you're out of balance. You got to go find your mistake.
Mm-hmm. Yeah.
Then you can enter those individual expenses that aren't on the settlement. I bought a pair of gloves. I bought some oil. I bought antifreeze, whatever it was. But if you're not doing that daily or weekly, or monthly at the absolute minimum, but I found that monthly's hard because it's hard for me to remember, man, I got this receipt, but well, what did I do on that day? You're better off doing that weekly. That's what Larry does, you know. But that's the big thing here. All this LLC, S corp, sole proprietor stuff is important. It's important to begin to understand, and you guys probably need to go back and listen to this a couple of times, because there are terms that they throw around equally that easily that don't make my eyes glaze over anymore, because I began to understand it.
Right.
But if you get to a word that Larry and Steve have talked about, pause, Google, what in the hell does that mean? And then you're like, okay, then you go back and listen to it. Oh, okay, that makes sense. But the big picture here is, if you are not accounting for your revenue expenses every day, you cannot know the health of your business. And if you don't know the health of your business, one day it's going to die, and you're going to go, what the hell just happened? You know?
Well, remember that tonight the subject here was taxes. You know, taxes assume that you're already doing basic bookkeeping and keeping records. So we probably could address that, but we kind of started at a higher level than that. We started at business structure and the tax advantages of each. But if you want to go there, that's fine. But the bottom line is, it doesn't matter what system you use. Any system works. Even spreadsheets work. Even a file folder with repairs, fuel, that works. Keeping the receipts, I would prefer that you digitize them, because especially thermal paper, it goes away. And the IRS, by the time you get audited 7 years from now, you can't see it. But digitizing, getting in the habit, the wax on, wax off, of I got a receipt, I got to do something. That's what we teach our guys. You can't leave the fuel island if you work for us without scanning that receipt in.
You better not.
If you don't, you're going to have his foot in your ass, okay? That's what we do here, is we teach you the habits so that you get the basic, understanding of the skill sets that you need to survive in business, okay? Any business. And so, we as truck drivers, we think the important thing is delivering freight. And it's important, but it's not the only thing. If you can't tell me whether or not you're making money or not, I don't care how much freight you deliver, okay? It doesn't matter. You're still going to go out of business, all right? So this basic skills of keeping records, it has to happen. That's the number one problem we have with taking people who drive trucks for a living and let them buy a truck and become a business owner, is now they have to act like a business owner, and they don't know how to do it. And the number, if I don't care what, I've said this over and over again, you go to a McDonald's restaurant and you find the owner, if you can find him, and you ask him what a ketchup packet costs that goes out the drive-through window, and he'll tell it to you to the tenth of a cent. You ask a truck driver what his fuel mileage is, well, it was 7 or 6 or 8 or I don't know, depends on the wind, okay? Has no freaking idea. And yet he's in a business running up and down the road in a $200,000 truck, in a business. So, I mean, that's the problem here, Again, we're talking about taxes tonight because of the time of year it is, okay? It's the time of year to make the decision whether to be an S corp or an LLC or a sole proprietor or whatever. And April 15th is around the corner, or March 15th if you're a corporation is around the corner. But if you don't have the basic understanding that every time I spend money, I've got to account for it, I'll tell you something else too, okay? I've got accounting clients. Okay, I've got a new one, and he uses his business debit card to pay for all his meals. I'm like, dude, that's not deductible. That's what the per diem's for. Quit doing that. Okay, That's not a deduction. Quit spending that pay that out of your pocket. So understanding the tax law, understanding what's deductible, understanding what it is, that's part of being in business. And we're getting way off track here, but anyway.
There's something important there, because if you'll take the time to sit down with a real CPA, they'll give you information like that. What I would like everybody to understand is that everything that we teach in the Blue Ribbon program and everything that we're talking about on this show tonight is experience based.
Right.
right? And anybody that goes anywhere with me, I took one of the guys with me to lunch today, and the very minute that the receipt touched my hand, my phone came out of my pocket and I scanned it. You know why? Not because I think that's the best way to do it. I know me. And if that receipt goes in my pocket, I'll never see it again.
Right.
If I throw that fuel receipt on my dash, I'll find it 18 months from now when I'm cleaning up the truck. I'm like, oh, hell, there's that fuel receipt.
Right, right.
It's got to be an absolute habit that you don't even think about. It's just, oh, there's a receipt. I've got to scan this. And at least if it's in iCloud, Google Drive, Dropbox, wherever it is, that doesn't matter, the platform. If you will at least just create that habit, tell me this, guys. Give me the 3, 5, 7, 9, whatever it is. If I have a Dropbox, an iCloud folder, a Google Drive folder, how many folders should I have and what should they be called? And I'm going to put my receipts in. There's a question for you.
That depends on how OCD you are.
Right. Your categories. I mean, it's like you said, you can have a lot of categories under categories, but really the main categories: fuel, fuel toll, scales,
maintenance,
maintenance, maintenance, repairs. Some people will separate those, but I always keep those together unless it's something big. Let's see. Supplies, obviously.
Office supplies.
Office. I have those separate, right? Supplies for the truck and office supplies. Those two are separate. And under office supplies, if I buy postage, it goes in there. I mean, everything office goes in there. I mean, I don't. Yeah, I got a guy one day he had 4,500 subcategories on profit gauges. We cleaned him. We cleaned
4,500.
Yeah. Everything he ever got, he made a category for that one item. I mean, it was like over 5 years. So you got to clean this up. So you want to keep it pretty simple though. The main, like I say, all the main ones. I know we missed
major category. The more subcategories you have, the more analysis you can do. I just looked at my chart.
Some, Chris, you won't pick up. You won't pick up needing a receipt to put in it. Your things on your settlement. Those are categories.
Stuff is already done.
But those profit gauges will set that up for you. They have a template for Landstar because they probably got 1,000 or 1,500 Landstar clients. There's a grand total of 19 categories on Schedule C. If you look through there, we don't use but about 12 of them, and then we have a few that they don't have. But that's kind of it. But then I would like you were talking about, Chris, if you can separate it inside of Google Drive and have those separated, so it's a little bit easier when whoever's doing the accounting ends up going through it. If they have to go through, it's just like that. The Google Drive is just like the Walmart bag if it's all put in one file. When they get it. Now it'll look a little better than the ones coming out of the Walmart bag, but yeah.
Well, let me do this. There's about 3 or 4 comments here. I want to hit these comments and we'll give them a quick answer. And then I've got the 2 notes that I've made, and then I've got the piece de la resistance that we're going to end the show with. That always pisses everybody off. So we'll end with that. So we got, hi Steve. If I buy a used truck, new to me, can I take depreciation on it, or did the original owner get that, and I only get the normal expense write-off?
You get whatever you paid for it. That you can get it as a depreciation put in as a 3-year property and a 4-year schedule. Or you can Section 179 the entire amount, most likely, because this is going to be a used truck, 50, 60,000. You could probably write it off the first year if need be. But
let's discuss that because we talked about that earlier, and I said, well, I would defer that. So let's talk about depreciation versus Section 179. So here, Steve, I'm going to talk, and you tell me if I'm wrong. Okay, depreciation is taking the amount of money that you spend for an item and taking the deduction over really 4 years. It's 3 years, but unless you bought it on January 1, it's going to come in 4 years because the partial years. Okay,
right.
Section 179 is an IRS provision, and it changes every year, and the IRS establishes that, and they usually don't do it till late in the year, like April when they decide it. But they'll say, okay, this year the 179 limit is $100,000.
I think it's
whatever it is.
250 this year, but
250.
yeah.
So in that situation, if what you bought is less than what the 179 maximum amount is for that year, and then I'm going to go with him and say 250, then you can deduct it all in 1 year. Right. Here's what happens though. This is where having a good tax accountant comes in, because there's a strategy there. Okay? If you're having a really, really, really good year and it's 2021 and you made an ass load of money, and you bought a truck and you want to depreciate the whole thing and offset a lot of that income, bam, it's available to you. But it's 2022 and you didn't make an assload of money in 2022, but you think 2023 is going to be better and 2024 is going to be better than that, maybe you depreciate it so you have that deduction over a 3 or 4 year period. So that's a difference between full depreciation and a 179. And your tax accountant's going to set up a depreciation schedule for you, and they're going to tell you what the depreciation is for each year of that item. Now, did I do okay there, Steve? Or
yeah, you did, and like you did, and like I say, there's only a certain instance. I don't like the 179 everything. I did. I got a $148,000 1099 for that truck, and so I did 179 so it would be a wash that year that I got in 2020. But I did it, and it didn't change my situation any, because I had $148,000 income, the gift, and $148,000 Section 179. But in most cases, I like to depreciate it if you're planning on staying in business. But the guy that's going to be out of business in a year or two, he might want a Section 179. If he's not if he's not going to hang in business, he probably won't get to all of his depreciation. That's the kind of the only one. Now, Kevin, I love Kevin to death, but Kevin, he talks about Section 179. Always wipe it out if you can. Right. I'm of the feeling our first two tax brackets are pretty low, 10 and 12%. I like to fill up those two tax brackets. So if you're a married couple in 2022, your taxable income is $82,000 or less. That means $105,000 adjusted gross income. You're still in the 12% federal tax bracket. Right. I don't mind filling that bracket up. I'd rather use the depreciation to keep some for next year. Now, if you get once you get past that amount, then it's 22%. Then I want to use enough depreciation to bring it down to that point, and then that's it. I like to do it that way. I do the same thing when I advise people about changing traditional IRA money, rolling it over to Roth. Same way.
But Steve, here's where having a good tax accountant comes. What you just said there is your strategy, okay?
Yeah.
And so here's where having a relationship with a good tax accountant that understands your situation. That's why I hate these national truck driving accountant services that, I won't say the 4 letters, but they start with A and end with S. This is why you don't do that, okay?
Right.
Because there's not one size that fits all here. Everybody's situation is different. You need to go in somewhere in your town and find somebody that you can work with, that you can get kneecap to kneecap across their desk and go, here's the deal, and they understand your situation, okay? Because everybody's different. And what you just said is absolutely right, but you'll find so many people, though, that just go, well, no, here's the way to do that. And that's just that's exactly not right. So
go ahead.
There are no blanket answers.
No, especially when it comes to taxes. Do you know what the tax code looks like? It looks like this thick, okay? It's this thick. And there's nobody that knows it. There's not one human being that knows that tax code. So
every year they give the same family's finances to 50 tax preparers, CPAs, enrolled agents. They give it to them, and you know what? They come up with 50 different answers on the tax return. So
it's almost like PC. Everybody's got an interpretation of it, okay? So who you going to believe? Well, whoever the hell knows your situation best. So
right.
All right, let's move on to the next one.
Okay.
Steve, can I loan my LLC money to buy a truck and pay myself back with interest? Say 10%, or maybe I'll charge myself 25% payday loan rate.
that ain't going to fly, but the 10 would. But yes. Go ahead, Steve. You take it away.
Yeah, and that's just making things too confused. Look, if you're gonna when you go into business, if you have the money and you put the money out to buy the truck, then you're gonna get that either a depreciation or a Section 179. You're gonna get that anyhow. You are confusing your taxes a lot by trying to do this. If you do that, you're gonna have to also pay interest on the pay taxes on the interest. So
pay tax on the interest, right?
Yeah.
Right.
So you're gonna So that is confusing thing.
It's kind of a wash, though, isn't it, Steve? Isn't it a wash?
It's about a wash, except you're going to probably have to pay a little tax on the interest. I mean, it really would be a wash other than that. But when you go into business, you're putting capital in. Let's say you put $40,000 in to buy that truck, rather than loan it to it. Now, if somebody else is loaning it to you, then you pay them back. You don't get any deduction for your payments back to them, but you do get deductions for the interest, and you get to send them a 1099, so they got to pay tax on the interest.
What about recapture, though, on that when it's sold?
When it's sold, you're going to still depreciate it like normal. Anything you depreciate, if you depreciate that $40,000 truck fully, and then you sell it for $20,000, you're going to pay $5,000 in tax. The recapture is 25%. Right. Of it. Now, if you have a situation, and I've gotten a truck for a very, very cheap price, that if I were to sell it later on,
you got a truck for free. Come on, quit screwing with us.
No, that one I've already depreciated. I'll have to pay recapture on that. I have a vehicle though that I bought that I bought for a very good price. I may make $40,000 appreciation on it. Then I would be paying capital gains tax at that point.
Correct.
On it. But I would be paying recapture on the 25 for just the amount of depreciation I had. So,
what's the current capital gains rate, by the way? Do you know off the top of your head?
Well, if you're still in the 10 or 12% bracket we were talking about earlier, if your AGI for 2022 was under 105, is zero.
Mine's 37%. What's my capital gain?
Yeah, yours is 15%.
Thank you. Thank you very much.
I think the big picture here is don't overcomplicate this, especially when you're young in business.
Right.
When you get to the level of Larry and Steve, there are probably some of these policies and different things that you can, again, with the advice of a good CPA, that can say, hey, Larry, well, you've got these trucks and you could do this and you could do that. That's great. But for the young business, just do what you can and first not go broke, and then not get audited. That's the big thing. Now, I've always heard this, and this goes back to these godforsaken advertisements on radio and television. Yep. Can I create my LLC in a more tax favorable state than my own? Why do so many businesses register in Delaware?
Well, they are mostly C corporations in Delaware. If you wanted to do it, you can go to South Dakota and you can stay overnight and you can be registered as you got to change everything over. You got tags, everything else got to be changed over to South Dakota, but it can be done in one day. And they have a mail service for you. And if you're in certain states, it would pay you to do that. I've looked at it. North Carolina's a pretty high tax state for the South. Yeah, it still wouldn't work for me, but it can work for some people. I reckon if I was in New York, or if I was in Illinois, or if I was in California, I would go to South Dakota. But other than that, I don't really see that being. Don't worry about what the Nevada corporations. Nah, don't do it.
Do you have to have a brick and mortar location? Do you have to have a mailbox? What's required to continue that
some
that
mail drop in South Dakota, I think is what it is, and
okay.
and they have businesses that are set up just to do that. So they get a lot of people that do that. But you got to, like I say, you got a lot of things you got to put in into there. You got to get a driver's license there. You get it all. I mean, they've got it set up where you can get it all done in one day. They must really have a better DMV than we do here.
Well,
uh,
I think the big picture here, we're going to get out the BSE 9000, okay?
oh,
And we're gonna make some calculations on whether some things are worth it or whether they're not. But what we're not going to do is we're going to not listen to satellite radio or late night television and have somebody sell us a big steaming stinking pile of horse shit. We're actually going to talk to the experts, which is your CPA that knows the laws in the state where you live, and then we're going to get out the BSC 9000, and we're going to put in the numbers, and we're going to say, okay, well, this is either A, advantageous to me and it can save me money, or B, it's a bunch of nonsense. It's not going to save me any money, and I don't want to waste my time on it, right?
right,
including
exactly.
the truck stop lawyers. Okay, by the way,
Exactly.
Especially them.
So
100%,
And-
especially those guys.
the diesel
Chris,
doctors, as I call
Diesel doctors, yeah. Chris, I'm gonna have before you get done, I'm gonna have 2 items we got to get in for people that did make a lot of money. There was a lot of money to be made in the first 2/3 of the year last year, and then it died out for them at the end. So we got 2 other items that people probably might want to check out if they're an S corporation, because
No,
it will help you.
Let's do that
It'll
now.
Yeah. So one of them is called the Augusta rule. And I don't know if y'all know, there's a little event they have in Augusta every year, Georgia, called the Masters. And so there are people there that corporations will rent for a couple of weeks. They'll rent somebody's house for like $20,000.
Right.
So the IRS came up with an Augusta rule a few years ago. They had a lot of pull down in Augusta. And so you can rent your house to your corporation 14 days a year. Okay. And it's a totally legal deal. The good way to do it is once a month have a family board meeting for the corporation, and keep minutes, do everything. We're supposed to keep minutes for our LLC anyhow. Keep minutes for it. Go over. You should be going over your monthly business report anyhow every month. So if you do that, reasonable amount, it's a couple of $100 each month. That's like a $2,400 deduction. You're leaving a couple of those days on the table. But that's something anybody in the country can do this, by the way, but they got to rent it to a corporation. So you can rent your house to a corporation. You can Airbnb your house for 2 weeks a year and not pay any tax on it. That's something else you can do. Yes, you can do that. So but you cannot do it. You cannot do it if you're a sole proprietor. So that's one of them. And go ahead. You get any questions on that?
Well, part of that is back to that piercing the corporate veil thing. Okay, if you're going to be a corporation, you have to act like a corporation. And part of acting like a corporation is you have to have minutes of your meetings. You have to have meetings.
Exactly.
You have to have an annual board meeting at least, okay? So you have to do things. This is all lined out in your chart. When you pay somebody to file your LLC, or if you do it yourself, all that stuff is done in the operating guidelines of your LLC. So now what happens is if you don't do that, then you're no longer a corporation because you don't act like one. So all that liability that you expected to get's now going out the window, okay?
Yeah.
So you can have a board meeting. You can have a board meeting anywhere the hell you want to. I have my board meeting every year in Wellington, Florida, okay?
That's it.
Because that's where I want to have it, all right?
Exactly.
So everything involved with me having that board meeting there is tax deductible, all right?
Exactly. Yeah.
So anyway, go ahead.
That is a good one that people can do if they're S corp. And the other one is if you had a good year, any year that you got, your salary plus your profit, whatever that business brought in total, can't count the per diem, but all the profit and your salary, 25% of it up to for 2022 up to $61,000 you can put in a retirement plan. Now, I generally do that. I'll put 25% of mine in a SEP IRA every year. You can do 401k all during the year with your payroll, but with most companies, that fees are kind of high on that. You can do a SEP IRA at Vanguard very cheaply, and that marks all of that off where you don't have to pay tax on that money. You're putting it in your retirement plan for later on, and you're kind of pushing it out. You're going to pay tax on it one day, but one day I hope I'll be making a little less in retirement when I pay the tax on it.
The bottom line here, though, guys, is this, okay? Listen to all the knowledge and all the advice that's coming out of this fellow's mouth right here, okay? The lesson learned here is hire a professional and listen to him, okay? Yeah. That's what I always tell people, hire a CPA, okay? Because they know what the hell they're talking about, all right? Don't hire the truck stop lawyer, okay? They're just repeating what somebody told him that doesn't know shit from Shinola, okay? Hire somebody that knows what the hell they're talking about and then listen to what they say. You can learn a lot. Steve's got years and years and years. I've been in business since 1977, okay? I don't sell myself out for tax advice, all right? I don't do that. That's not my thing. But there are people that you can pay to do that to. It's money well spent, because all these things that he said and all these things that you hear that are factual, not just something that was pulled out of your ass, and said for the benefit of the reaction, can benefit you. But if you don't take the time and the effort to go hire a professional, look, you guys talk all the time about people who use hot shots, and they don't pay for professional transportation. You want them to use you to move their freight professionally. Do the same thing. Hire somebody that's a professional and let them help you with your taxes, okay? Let them help you with your accounting and let them help you with all this advice, because it's going to come back to help you and not haunt you. The bottom line is, the more of this stuff that you do, the better bookkeeper you become yourself. And Steve, you can vouch for me on this. The less it's going to cost you to have somebody put that on a tax return, okay?
Exactly.
If you come in there with a box full of shit and you drop it and run, listen, when I first started out in business, that was my method. I had a box, and I would drop it on her desk, and I'd run like hell, because I don't want to hear her yell, bitch me out. Now, she bitched me out with the bill that she gave me, but as I learned and as I got better, now when I go in there, she goes, I wish all my clients were like you. Because it's ready. All she does is figure the depreciation, put it on a tax return, and goes. So, look, I don't have a training in bookkeeping or accounting or anything. Look, I'm a dumbass, all right? But if I can do it, you can do it. It's all a matter of wanting to do it. And if you're going to be in business, the reason to do it is to stay in business and to make as much money as you can while you're doing this, right? So.
And don't believe the lie that you've probably been told since you were a little kid, that you're not smart enough to figure it out. You, like we tell this people with maintenance, you may not be able to turn the wrench, but you can gain a basic understanding of a suspension, of an air brake system, of how an engine works, so that at least you may not be able to ever turn the wrenches, but you can tell when somebody's feeding you a line of bullshit. And that's the most important thing. If you will invest the time, go watch YouTube videos. If you don't understand what QBI is, if you don't understand what an S Corp is, at least spend the time to educate yourself on the basic understanding of what that is, so that when you do go to a CPA, you can go, wait a minute, what did you just say? And then if they can't explain your question, Dave Ramsey always talked about finding people that have that heart of the teacher. So if you go to a CPA and they're not willing to teach you, find somebody else.
Leave. There's plenty of them, okay? Yeah.
There's plenty of them. You can go find another one, and then they'll sit down with you and they'll begin to teach you and help you understand. But if somebody's not willing to invest the time in you as their customer, the person paying the bill, the person that's really in charge, and they're not willing to say, okay, well, hold on, stop. Let me explain this to you in terms that you can understand, then you need to go find somebody else because they're not willing to give you the full service that you need as their customer.
Let me tell you where they're not. They're not in the lobby of Walmart, okay? They don't start with HR, okay? They don't start with A&M with S, okay? Do yourself a favor. Find somebody in your town that's a CPA. You know, they don't have to be part of a big firm, all right? Probably the smaller the better. If you go in there and ask you those 3 questions, Steve, do you understand per diem? Is how much of DOT per diem is deductible? Question number 1. Number 2, what was the other thing we talked about before we got on the air, Steve? The questions that we're going to ask. Help me with this.
Well, we talked. One of them was depreciation. How do they handle depreciation
over how many years?
Yep.
Right.
Yeah.
And there was a third question that we came up with.
There was a third one that you had mentioned in there, and it was a good one. Let's see.
I can't remember what it was now.
I can't remember what it was either now, but we'll get back through it and we'll see
okay,
it.
Man. So, Steve, are you willing to take emails from people that have questions about this?
Would love to. To. Be glad to. At any time, like I say, I mentor and talk with a lot of people at times. So like I say, they can catch me there. They can catch me on Facebook.
You're not in the business of doing tax returns. I think I don't think you want to do that, right? But you'd be happy to answer a few questions.
I've done a lot of them. I've done a lot of them all my life, but no,
right.
not at this time. And
and
I think I can do better for people by not doing that and directing them toward better people than me. So.
Well, Steve, listen, we really appreciate you coming on tonight. I appreciate your, first of all, I appreciate your friendship over the years. You've always supported us. I appreciate that. If you guys have any questions, email Steve. Now, I understand he's a full-time BCO. Don't get upset if he doesn't answer you right away. He does run the business and that sort of thing. And he has a beautiful family and life in Carolinas on the beach. So cut him some slack, okay? But he's a great resource and a great friend of Blue Ribbon. We appreciate you, Steve, a lot. Maybe we'll come back after tax season and hit on some of these other accounting kind of things if you're willing to do it.
Do that, definitely.
Steve, will you be attending the Louisville Truck Show at the end of March? Are you going to be involved in that, or?
I may very well. I'm gonna try to be there again this year. I'm trying. I made it last year, but only for one day. But I want to take the full 3 day. It was too much. Just too much. I knew everybody there. I mean, that's the thing. You didn't get to see anything because you knew everybody.
That's our problem. We have to wear disguises and go on Thursday. Like I dress up like a blonde in high heels. And Chris, I'm not sure what he does this year, but we have to disguise ourselves on Thursday, and then on Friday and Saturday we're there. We're at the Pittsburgh Power booth on one day because they're our sponsor, and the Landstar booth on another day. So that's coming up. If you guys don't know about the Mid-America Truck Show, is the largest truck show in the world. It's in Louisville, Kentucky, 1.5 million square feet of exhibit space. It's March 30, 31, and April 1. We'll be there. We're going to do a live podcast from Cedar, Southern Indiana on Saturday night, I think it is, Chris. And then we'll be at the truck show. We'll be in the Landstar booth on probably on Saturday, and the Pittsburgh Power booth on Friday. And then Thursday, you're not going to find us because we're going to try to stay away from you so we can enjoy the show. But look us up, and we'll be happy to meet you guys. Steve, we'll run into you there, I'm sure. And again, thanks for being with us tonight. Chris, you got anything else before we close it out?
No, I believe we're good. We'll be with you next Sunday.
Let me look at the calendar. I think that's true, but let me look and see real quick. We've got some things coming up. Let's see. Next Sunday, yes, the 22nd. We will be back to our normal situation. We'll be from our home studios. Now, look, we have got lots of people who want us to manage their trucks for them. We've had several fleets contact us and several individuals contact us. So looks like we're going to go through another one of those growth spurts this year. And so if you have any interest at all in being in the program where We teach you all these things we talked about tonight. We teach you these basic skills, and in the whole context of being in business and staying in business and being highly profitable by controlling your costs and that sort of thing. Reach out to us, driveforblueribbon.com. There's a submission there you can send. We'll set up a Zoom interview and talk with you. We are going to have a lot more capacity this year than we've ever had because, quite frankly, a lot of people cannot continue to operate their trucks in the current environment. We can because our cost of operation is so low. And so we're going to have a lot of opportunity this year for you to be able to get in a truck and learn our program this year. So our program is our website has been redone. The program is at www.blueribbonlogistics.com, and then push on the Masterclass 2023 tab, and all the information is there. Our next class is starting the end of February, and then the next cycle will be right after the truck show in April. So if you want to get involved, it takes about 30 days to get you through the Landstar qualification. So that's the time frame it takes. So if you want to do the February class, you got to get doing it now. And then the April class, you got to be doing it by the 1st of March. And then you can get in the program. If you've got more questions about that, reach out to us. We'll set up an interview with you on Zoom, and we'll talk about the opportunities for you and that sort of thing. Steve, again, thank you for being here. Thank all of you guys for the comments. Some of them, we'll forward these on to Steve. If you guys want to contact him about these individual questions that we couldn't get to, I'm sure that he probably will. I'm
gonna say this address for the people on audio: liberty505850 @gmail.com. liberty505850 @gmail.com.
And Judy Bowerly, it's good to hear from you, my dear. Long time no hear. Appreciate you being on here tonight. Appreciate all of you for listening. And listen, our social media has exploded this year. Chris knows the numbers, but we have like a jillion listeners and a jillion followers. And we appreciate your guys'
Input,
interaction, input and following us and that sort of thing. I know sometimes we get to be controversial, but that's just fun, So we don't want to keep it boring. So anyway, we're going to hit the bar, which time it's way past our bar time. So you guys have a nice rest of the weekend. We'll be here all weekend with our new hires and getting ready to start this new year off. Appreciate everybody. Thank you so much, Steve. Thank you. And we'll talk to everybody again next Sunday night at 9 o'clock at our regular time. Okay.
All right. See y'all.
All right. Good.